Good afternoon. This is Julie, J Auto Trading Strategies. It is Tuesday, my favorite day, and it is May 1st, my one of my other favorite days, May Day. And of course, I do like Cinco de Mayo. I have quite a few favorite days, but this is a good one. It's Tuesday and May 1st. So this is the NASDAQ, and you can see all the green across the board. Thank you, Apple. Another just killer report came out. We were in the trade room. My traders got anxious this morning when price got up to this Asia session high and started coming back down to the close, saying things like it's failing, and when it double tops and fails, then we want to reverse. And ordinarily, yes. But the linear regression was up. And even on the 2 minute, we were watching a 2 minute, I think, the linear regression was up. So you just have to be real careful with linear regression because it's going to show you the way. Now, granted, it can go up and down, especially like on a 2 minute chart. So that's why you want to blend it with a higher time frame. And you really do want to trade 60-minute, 15-minute, 3-minute momentum. And if you can match this with a linear regression, then that's what you want to do. And so I think that this is going to lift the markets back up. I mean, we had a big sell-off today. Um, Crude sold off, gold sold off, the YM made it back to break even, the ES came back up, but they were, selling off pretty hard. But what I wanted to just mention to you guys is, again, this is the first time in over 10 years, that's a long time, a decade, that the earnings are real. They're not all corporate buybacks and this accounting trickery. Now, granted, there was an accounting rule change, but most of these earnings are the result of what the tax legislation did, plus the tariffs. You've seen the countries that have already started renegotiating the tariffs that they charge our companies for doing business with them. So, say you're Apple or whoever, and you sell your products overseas, those countries are charging them tariffs to be able to access their consumers. But yet, when they send their products to our shores, we don't charge anywhere near the same amount. It's not fair. And we're the largest economy in the world. We have the largest, GDP in the world for them to sell to. Yes, China has more people, but they don't have money. So we're talking GDP, economy. We have more capital, people that have money to spend on products. That's why we hold all the cards in this. So they should be kissing our rear ends to be able to keep selling their stuff to our markets. And so I'm all for Trump evening this out. The best way for our president to get the GDP up is to narrow that trade gap. And we want him to do that. So I'm all for it. I think the Eurozone will capitulate. They're going to have to. Again, they want our market. We want to trade with them. We just want an even. We're not asking them to do something that's not even. I mean, hello. We just want it to be even. There should be no tariffs. They should just take them off the board for everybody. Open the markets up. I don't understand the tariffs. So they think that we're going to flood their country with clothes or something so that they can't use their own manufacturing base. I'm not quite sure. Is that, I don't know all the ins and outs of it. Grant me that. But I just know it's not fair. They want to send their stuff here for us to buy, then we need to charge them the same amount of tariff that they charge us. say it like that. So I think that would even it out, and that would probably reduce everything. Like I said, you've got Australia, all those other countries that have already come to the table to renegotiate the tariff by today's deadline, like they were supposed to. But you have Canada, Mexico, and Europe still trying to negotiate this or wiggle their way out of it. And I think that they should hold fast, get everything that you can to get our GDP up. And with our GDP up, um, that's the booming economy that we want to go in. That's the continuation of this growth. So everyone's saying that we're at the top of the castle. Forget about it. We had no castle for 10 years. We had artificial QE. That meant that the Fed propped the market up. So every time it hit the 50 moving average or the 20-day moving average on the daily, they would start buying and pop it up. So no more. That's not happening. The marionette, the strings have been cut. You've seen the market, volatility come into play since we got our new Fed chairman, and I thank him very much, Mr. Powell, for doing that, giving us back our market to trade in. But now we got to get the traders off this mindset that we got to sell the market. Well, why are you wanting to sell the market? You've got growth, you've got earnings. Trade the growth. I'm just saying. So anyway, here is the what I've been working on. We've noticed outside of really extended periods like this afternoon with that earnings report, um, if the distance between the trajectory line, as far away as it gets from that moving average, when it gets to approach a certain level, I've been noticing that price will turn around on this bar type and for the setting that I have. The settings will change if you change the settings. So I've noticed that, if it gets extended out a certain amount, that it's going to reverse and come back to that EMA. And so I was able to put together a simple bloodhound strategy in about 2 seconds with that ratio in it. And here we go. This gives me the warning sign that I've been looking for that lets me know that my ratio has been met. And bingo, I get my signal, and I can either, stop pressing longs at that point, you know, and trade it back to that EMA, or, you know, buy it. Sometimes you can buy the EMA and get it back up, like right here. You got your warning, came back to the EMA, then it turned around and went back. So that's often a good location. If you're in an uptrend and you know that you're solidly in an uptrend, you just have those reversals. So I'm now learning what that ratio is so I can take price off. Now, with that said, if you get a good, strong downtrend, that ratio is going to carry. Um, but there's a second ratio that I'm working on for a companion to this, um, so that when I get into these runner situations and it doesn't go back to the moving average and say it continues down the path, that means we have an excellent hot trend condition. It's going to be my trendomatic meter. And I will be adding on and adding on. That you need to know when to start hitting it, hitting it, hitting it. And hopefully this is going to match with my linear regression and higher time frame trend. And it will look something like this does. It's going to be all green or all red. And I can, know what to do with that. And that's like, hit the pedal with the metal. That's like right here. This is just blew my ratios all off the water because the price went up off that apple. So I'm going to be finalizing these two components to the triggers on the high-low 2. Working on that, looking forward to working on that. And again, like I said, um, trade what's in front of us. If obviously if they want to send price back down and crash this market, we can make money going long or short. It's just nuts to me that everybody I talk to is so afraid to go long. It's like, why? We've got earnings, we've got growth. They're negotiating these tariffs. Good Lord, this is the time to be like stuffing your portfolio with as much stuff as you can and write her up until we're proven wrong. And we know what that looks like, right? Um, Let me show you if you just want a quick indication of when to trade a market, and that's right here, your weekly daily. You want to go in the direction of your weekly daily on the market analyzer. So when those two match, that's what we're looking for the lower ones to come around. So the weekly dailies have turned red on the YM and the ES, but we need to get those turned around going back in the right direction. So, and I think it will. I think these markets will finally get it. And I think a lot of people are under pressure, sell in May, go away, and all that other crap that works. And it works well in other market conditions. This is an abnormal market condition because of the tax law legislation and the tariffs that are being renegotiated and the growth that's hitting our companies. Just look at the revenues. They're blowing them out of the water. You got to go with it. So I'm going to stop preaching. I'm going to go back to working on my algo. Y'all take care, and we'll see you in the trade room. Thank you so much.